We receive numerous inquiries from prosumers asking that we clarify the meaning of a no claims bonus, or NCB as it is generally referred to. We would like to start off by reiterating that different insurers use different underwriting methodologies. So whilst NCB is still commonly used by a large portion of the industry, have many insurers migrated onto merely looking at period of insurance and claims experience in their pricing the risk. NCB is simply an indication as to the level of discount that is applied to your insurance policy. The key components considers your relationship with your insurers in general. In other words, for how many years have you had short-term insurance? And then there is the deduction in those years based on every claim you have submitted. The first important takeaway here is that you can only claim an NCB benefit if you have had short-term insurance. So if you cancel your insurance for whatever reason 2 years ago and you now take up cover again, will your NCB with most insurers be a 0? That simply means you do not qualify for any additional discounting based on your individual risk. As you gain years of insurance, let's say for example you have now been insured for 3 years, would you qualify for an NCB of 3? This simply means that you should get additional discounting on your risk. Should you however have a claim, say for example a vehicle theft, would the insurer then reduce your NCB by 2 years for example, leaving you with a 1 NCB again? If you then go on another year without a claim, will it then progress onto a 2 NCB, and so you will build up your NCB once again. We can appreciate why many insurers have elected in rather considering continuous period of insurance and then simply adding a loading for each claim suffered based on their own underwriting guidelines. In other words, they simply ask you how many years have you had uninterrupted short-term insurance for. You would confirm 5 years for example, which would most likely lead to, for example, a discount of 30%. When they then ask you about previous claims, and you then confirm that you had indeed suffered a loss in the last 3 or 5 years, again, is it the insurer's prerogative to consider the period they have deemed reasonable. Might they then in turn add an additional 20% loading onto your premium? In effect, would that suggest a 10% discount, which most likely should equate to about the same outcome if an NCB was used. We can understand why many insurers have opted to moving from the NCB, because it can get very tricky in calculating how many years have you had insurance versus the number of claims you have experienced over the period, and then allocate the appropriate discount. The other side of the coin was that not all underwriters applied the same principles when calculating an NCB. For example, some might include accidents wherein the insured was at fault, whereas others would consider all claims submitted no matter the outcome. The important takeaway from this video without causing confusion is this: different insurance companies make use of different underwriting models when calculating your insurance premium. The best advice we can give is if you move from one insurer to the next, ask the previous insurer to supply you with a letter confirming the period of cover, reason for cancellation, and your claims history. This way you can build up all the information of your past insurance experience, and when you speak to your new potential insurer and or broker, can you simply supply them with said information, allowing them to accurately price for your risk. Remember, whenever a discount is given, is it done so for good reason? Misrepresenting your insurance history might save you a couple of bucks monthly, but you might find yourself having to answer for the misrepresentation at claim stage. Be honest, give the insurer all the information, and allow for them to give you the premium. If you don't like the premium, shop around, because we are spoiled for choice when it comes to short-term insurance in South Africa.